In fact, Trump is also threatening a new front on the trade war with China. He's saying this time it's going to be over cooking oil. In a Truth Social post, Trump accused China of economic hostility for halting U.S. soybean purchases and said that his administration may end cooking oil imports altogether. In fact, the move could strain about $12.8 billion in annual trade as both nations brace for higher tariffs and rising tensions as well. So yeah, he's at it. He wants a resolution on tariffs with China, and he wants it anyhow.
You know, he's getting hurt by the soya trade actually, and that's primarily because China was one of the biggest importer of soya, and they've stopped importing from the US, and now they moved to Brazil. As part of the BRICS network, now China is sourcing everything from Brazil, and which is hurting all the MAGA states which are big on soya. So that's something which is So that is something which is hurting him, and he's not able to do anything, and that's why he's saying, okay, now I'll go back to the cooking oil. But I don't know, China has its own plans on cooking oil, I think.
And it's also the shipping, tariffs which China has levied on US ships. And that also could lead to a further conflict in terms of US ports imposing tariffs on Chinese ships and vice versa, which could continue to weigh on global trade.
That is more of a rhetoric than actual. If you look at the data which is there, containers from Asia or China are to the US have reduced drastically, and that is primarily because of the tariff which is coming there, and that's something which some of the analysts are also talking about, that the China-US tariff on the port fees is not going to have much of an impact as compared to the kind of trade impact which is already being seen. So the capital goods, the sector or the electronic sector, which was doing a lot of shipping across Asia and China to the US, has now almost come to a grinding halt because the trade container shipping is not happening in that region, and that's something which is very big in that sense.
But the recovery on the Dow as a result, and I'm not so sure whether it was the market looking through some of these factors which are global in nature, or was it the Fed's comments? Jerome Powell seemed to suggest
very significant comments, in fact.
Absolutely, and he seemed to suggest that the labor market continues to be weak, and he is finding it difficult, if I can call it that, to balance between inflation and labor market, and that between the two, he seemed to tilt more towards the labor market at this point. He assured of 2 rate cuts, so therefore bringing the probability of an October rate cut making it even larger in terms of the probability, 90%
plus. He said it in as many words, right? Signaling that the Fed may actually soon end its balance sheet tightening program. And remember, this was a key step that sort of paved the way for eventual rate cuts. And Powell said that the central bank is nearing the point of stopping bond reductions as financial conditions ease. But of course, he gave no firm guidance on future interest rates cuts, but the market is definitely reading in between lines. Actually, before we talk about the India markets, and yes, the handover from global equity markets has been quite okay. It was a volatile session, but marginally in the green. That's how the US equity markets have shut shop for the day. In fact, China is quite buoyant, or rather Asia is quite buoyant.